Welcome to IFRS Meaning. Today, we will talk about constructive obligations under IAS 37.
A constructive obligation is an accounting provision that a company must make as a result of a pattern established in the past, a certain policy approved by the entity that is in the public domain, or a statement made by the management of the entity where the company commits with the third parties to comply with some type of responsibility. Let's see an example to understand what a constructive obligation is. For more than 10 years, an entity has publicly committed to helping the most vulnerable population in a city. The entity is committed to building homes for this population. This project is expected to be completed in December of year 3. The amount of resources the company plans to disburse is unknown, because the number of houses depends on the population's needs. However, the entity estimates a 60% possibility of disbursing resources for 4 million, and a 40% possibility of disbursing resources for 3 million. In this case, the entity must recognize a provision of 3,600,000, resulting from the following operation. The next step is to recognize this amount at its present value, since the disbursements will occur within 2 years. Present value is used because the entity must show the time value of money. In other words, disbursing of 3,600,000 today is not the same as in 2 years because the money will lose value over time. For this example, the entity uses a discount rate of 10%. So, the calculation of the provision is equal to 2,975,207. In this way, the entity must recognize a provision in the financial statements. The accounting recognition of this provision is a credit to the account of the estimated liability against debit for the same amount to the profit and loss account. On the other hand, this economic fact is a constructive obligation, because no exists any law that obliges the entity to carry out this type of project in this community. In other words, this event occurs as a consequence of a policy in the public domain and a pattern of behavior established in the past. If the disbursements made by the entity had been a consequence of the application of a law, this economic fact would not be a constructive obligation but a legal obligation. I hope that with this explanation, you have understood what a constructive obligation is, what the difference is with a legal obligation, and how this provision affects a company's financial statements. Finally, if you want to learn IFRS, be an expert and make a difference, we remind you to review our course on International Financial Reporting Standards. The course has more than 270 explanatory videos, more than 370 analysis questions, personalized advice, and real-world examples and cases. In the video description, you can find all the course information. Cheer up, and take your professional career to the next level.